Hey guys, so you probably heard a lot about Bitcoin because of its recent explosion over the past couple years as an investment that has made a ton of people rich and wealthy. So if you're interested in learning more about this cryptocurrency and how you can invest, stay tuned because we're going to go over the basics of Bitcoin, including what it is, how it compares, how it works, and its utility in the modern world. This is a complete beginner's guide to Bitcoin so that you guys can have an understanding of the coin before you invest. Thank you to Earnity for making this free video possible. Let's get started. So this is what we're going to be going over in today's video. We're going to be going over the basics of Bitcoin, a quick look at the history, who the creator Satoshi Nakamoto is, the network, the tokenomics, use cases, and current news and updates. So yeah, feel free to pause the video right now if you want to take a look at the overview in more depth. But without further ado, let's start talking about Bitcoin. So to start off, let's talk about the very basics of what Bitcoin is. Basically, Bitcoin is a decentralized digital currency created in 2009 by the anonymous pseudonym Satoshi Nakamoto. So what does that mean? Well, it basically means that it's fully reliant on the internet and it's not controlled by any person or government. Compared to countries like the US or North Korea, Bitcoin is free from control. By being a fully decentralized and digital currency, Bitcoin offers to solve a lot of the flaws that the other currencies like the US dollar have when it comes to many things. So this includes things like hyperinflation, government control, and lack of technology. Their biggest contribution to our world is the concept of a blockchain, which is basically a public library of information that lives on the internet. And we'll dive deeper into blockchain technology shortly, but basically it allows money to be moved around in our society much more efficiently while remaining safe, which is what makes it so strong compared to the currency we have nowadays. So right now, the main competitor to Bitcoin is going to be gold, which is another store of value with a market cap of about $12 trillion, about 15 times higher than Bitcoin's current market cap. And a store of value is basically any asset or currency that maintains its worth over time. So gold does have some really unique attributes that make it really often used in certain tech, but there's not really any other use other than that besides being a store of value and investment because it doesn't deteriorate compared to other precious metals and there is a somewhat limited supply. You wouldn't be able to really use gold to buy or sell things because like who wants to carry around heavy blocks of gold, and it's just really hard to figure out how much gold there is and all that stuff. And just like gold, Bitcoin holds its value because of its scarcity and the safety from the power of the blockchain. The key difference though is that Bitcoin has utility across all financial service industries, unlike gold. Through miners verifying transactions on the blockchain, Bitcoin is able to be exchanged as a form of currency similar to the US dollar, but with the safety and stored value like gold. So let's take a look at the differences between Bitcoin and fiat and why Bitcoin is so good at solving today's currency issues. Fiat is government issued currency that is not backed by a commodity like gold, giving the central banks a lot of power over the economy. First off, Bitcoin is deflationary because of its limited supply, while fiat currencies are the opposite. When governments try to print more money to match the economy, they risk hyperinflation, which can sort of cause prices or items to dramatically increase in price. Second, Bitcoin loses out to fiat currencies at the moment because they aren't as accepted around the world as a medium. Third, Bitcoin is not controlled by any government, meaning it cannot be corrupted, unlike fiat currencies that are backed by that government. Lastly, Bitcoin is hard to steal because it's secured on the blockchain, meaning you wouldn't be able to hack into the blockchain unless you had over 51% of the computing power compared to fiat, which you can steal from someone quite easily. So why does Bitcoin matter compared to the other cryptocurrencies? Well, Bitcoin was the first major cryptocurrency that was ever made, and it had a huge impact on the entire cryptocurrency market. Hundreds of other cryptocurrencies like Ethereum, Luna, XRP, and Cardano have been launched as a result of Bitcoin's creation, and all of them were created and inspired by Bitcoin in search of the perfect online currency system. Just like how tons of businesses compete for the #1 spot, cryptocurrencies also compete against each other to, one day maybe surpass Bitcoin's position in the industry, but that is highly unlikely. So to better understand Bitcoin's future in our world, we need to understand the 5 properties of money. Those 5 things are divisibility, durability, rarity, acceptability, and fungibility. For divisibility, money needs to be able to be divided into smaller pieces so that they can be exchanged for smaller value items. For example, if you guys need to buy a pencil, you won't want to split up a $100 bill, but you'd probably use $1 bills because it's more accurate to the value of the item. A $10 bill can be split up into 2 $5 bills or 10 $1 bills. Gold, on the other hand, cannot be split into multiple pieces for exchanging easily. And for Bitcoin, you can split into 100 million separate pieces so it can be exchanged for other values, just like most fiat currencies. Now, for durability, money has to be able to withstand everyday accidents and mishaps. In the old days, they would trade animals, but if an animal accidentally got sick, it would lower the value of the currency. Nowadays, with dollar bills, it can be easily printed out to replace worn out dollar bills. But the issue with dollar bills is that they are paper and can be burned or torn. With gold, you can sort of melt it and mix it with impurities that would reduce the value of the currency. With Bitcoin, you can't destroy it unless you take down all of the other computers and networks that are connected to the blockchain, which is nearly impossible considering that there are millions and millions of computing machines in the world. Now, with Rarity, money needs to be able to be rare and deflationary in order to prevent hyperinflation, where you have too much of a currency being made to the point where it decreases in value over time. Because gold is a rare element to find and isn't unlimited in supply, it holds its value over time and is a deflationary currency. Similarly to that, Bitcoin is on the blockchain and there are only 21 million Bitcoins that will ever be mined. So it does not inflate like dollar bills, nor does it lose its value because it can't be melted or torn apart like gold and dollar bills can. Next is acceptability, which is probably Bitcoin's weakest point right now. So for acceptability, it's basically the fact that everyone accepts paper money and physical coins all around the world. So when a currency has high acceptability, that basically says that everyone accepts that money or coins or whatever around the world. So you have dollars, euros, pennies. These are all accepted as currencies in their respective countries, but for Bitcoin to be a good form of money, we would need acceptance everywhere. So far, El Salvador has already transitioned and are accepting Bitcoin as a form of currency officially. And you also have some companies like Walmart, PayPal, Microsoft, AT&T, Twitch, and more. So in my opinion, this is only the beginning as more and more companies and countries will begin to accept Bitcoin with the progression of blockchain technology. And then lastly, fungibility is a really important aspect of the value of a currency. If a currency is fungible, that means that each unit of value is the same. So for example, a $1 bill is worth the same as another $1 bill. And similarly, one Bitcoin is worth the same as another Bitcoin. Another good example is the fact that you can buy something for either one $100 bill or 100 $1 bills, and you would be getting the exact same thing because they are both worth the same. You wouldn't be able to do that with another form of currency, let's say like animals, because one cow could be totally different from another cow, even if they are the same type of animal. So that would mean that they have different values. And fiat currencies solve that problem. And now Bitcoin, of course, is also fungible. So now that we have an idea of what Bitcoin is and how it compares to other currencies, let's go over a brief history of Bitcoin and how it came to be. So Bitcoin started in 2008 when an anonymous user registered the domain bitcoin.org. After that, someone by the name of Satoshi Nakamoto announced a peer-to-peer electronic cash system with the release of Bitcoin's white paper on a website called Cryptography Mailing List. Then in 2009, the first 50 Bitcoin were created from the mining of the first block, called the Genesis block. The first transaction was also made with Hal Finney receiving 10 Bitcoin from Satoshi Nakamoto. Hal Finney, among other computer scientists, were said to be the early contributors and users of Bitcoin, but all have denied being the Satoshi Nakamoto. So now let's go into a little bit more detail about the actual creator of Bitcoin. Satoshi Nakamoto is the name associated with the person or group of people who created and released the original Bitcoin white paper in 2008. No one knows who this is, but it makes sense as to why the person or group behind Bitcoin would want to hide their identity. First of all, if we knew who created Bitcoin, it would sort of defeat the purpose of decentralization if we knew one person or group was responsible and sort of in control. Second, if we knew who was behind Bitcoin, they could easily be put in danger from all the publicity and attention that they would get for being the creator of the largest cryptocurrency in the world. So now let's go over the Bitcoin network, how it works, and what it consists of. The Bitcoin network is made up of a collection of computers who can also be referred to as nodes or miners. These computers mostly belong to companies that want to reap the benefits from mining Bitcoin because miners are rewarded with Bitcoin and transaction fees from blocks that get verified. Even in the future, when there is no more Bitcoin to be mined, miners are still incentivized by transaction fees to keep verifying blocks. If there are a lot of transactions and Bitcoin gets accepted everywhere, then miners will still be able to make a profit from just transaction fees once all 21 million Bitcoin have been mined. Right now, there are about 13,768 nodes in existence. So again, it just goes to show how secure the blockchain is because for someone to hack into the network, they would have to have over 51% of the computing power, which is basically impossible. So that brings us to security, which in my opinion is the coolest feature of cryptocurrencies. In order to hack Bitcoin, you would need over 51% of the computing power. Now, the number of nodes are continuously growing, which makes an attack less likely over time. And as a bonus feature, Bitcoin's blockchain is transparent, meaning if they did tamper with some of the data on the network, it would be immediately discovered, because it's essentially like robbing a transparent bank in the middle of a busy city full of cameras pointed at it. Now, cryptocurrencies also have the ability to hard fork. This is when the miners split off into a new blockchain if they ever get hacked, and so they can completely cancel out the value of the currency that got hacked. Now, as a community, they can decide whether or not they want to accept the currency that was tampered with in the new blockchain that they split off to, which gives hackers no incentive to even try hacking into the network. However, this does not stop hackers from getting into your own personal cryptocurrency from SIM swap attacks. But there are many preventative measures you guys can take, such as having a PIN or passcode on your carrier, using an authenticator app, or even more secure, get a physical authentication method like a key fob identifier. So speaking of security against SIM swap attacks, I wanted to talk a little bit about the safest crypto exchange right now, Earnity. Like I mentioned earlier, they made this free Bitcoin guide possible on my channel, and their platform is actually really great for beginners who want to buy, sell, and own Bitcoin securely. Earnity is the new social media community and crypto marketplace where you can earn, collect, and level up on your knowledge on crypto assets. It's super easy, and more importantly, it's safe. What makes Earnity so secure is the fact that they only use the two-factor authentication app and not text, which makes it way more secure. Last year, there were people that got hacked on platforms like Coinbase from SIM swap attacks, which are not possible with authenticator apps that rely on your actual phone and not just your SIM card. The good thing about their community is there aren't any bots, scammers, or fake accounts, because all members are verified. So it's a legit community of crypto enthusiasts that all want to learn and talk about crypto. They have a super simple buying process, and you can easily set up recurring buys to dollar cost average into coins like Bitcoin. Now, the reason why the community aspect of Earnity is so strong is because of their collections feature, allowing you to create your own portfolio, follow others, and vote on which portfolio is the best. You can also share posts and articles with the community, and they have reputation scores, meaning you'll know who to trust. Right now, the first 100 people that click on the link in the description, open an Earnity account, and make a purchase of any crypto on the platform will get $10 of Bitcoin. And make sure to give my Earnity profile a follow as well, because I'll be sharing my crypto videos and thoughts about crypto on there. So head down to the description right now and get your free Bitcoin with Earnity. So now let's briefly go over the cryptocurrency's tokenomics and how it works. Like I said before, there's a 21 million Bitcoin limit, which means that there will only ever be 21 million Bitcoin that will ever exist. Bitcoin has a volume of over $37 billion, a market cap of over $800 billion, and about 90% of the Bitcoin have been mined so far. Experts predict that we will finish mining all of the Bitcoin in existence in the year 2140. So this is pretty much the whole design of Bitcoin, which sort of looks complicated, but it's actually pretty simple once you break it down. First, you have the total supply, which is capped at 21 million, and with the rewards being halved every 4 years, we probably won't see the final Bitcoin mined until, like I said, around the year 2140. You can see that every time a transaction is made, a fee is paid to the miners for adding and verifying your transaction on the blockchain. Once the miners receive new Bitcoin from their mining rewards, they bring the currency into circulation when selling it on the market. It's simple, and the mechanics are predictable compared to other cryptocurrencies, which is what makes Bitcoin such a good investment for people that are bullish on blockchain technology. Now let's go over the use cases of Bitcoin and how we can use them as a form of currency for efficiency and safety. So for one, we can use Bitcoin as a payment method, meaning people could send and receive Bitcoin internationally at lower transaction fees, no conversion costs, and faster speeds through the digital network. As a storage of information, Bitcoin has already proven its use because of blockchain technology. This new technology has led to hundreds of other cryptocurrencies being made with different blockchains and storing different types of information with their own algorithm. Then we have automatic finance, which has a lot of potential in the works workforce because workers could automatically and accurately get paid with cryptocurrencies through automated blockchain algorithms that can track hours, things done, and send currency out to the specific individual. The next use case is investments, which has shown to have lots of potential with people making a ton of money by investing in the cryptocurrency market. As a potential to be the future's form of currency, Bitcoin's impact on banking would be a transparent banking system where transactions can be seen by everyone, making it really difficult to tamper with. And with the creation of Bitcoin, other coins have a competitive incentive to create better solutions in order to take over Bitcoin's #1 spot. And then next, looking at the price, we can see that the value of Bitcoin has grown a lot in the span of a decade. We can see that in 2011, Bitcoin was worth less than $1, which is incredible compared to the all-time highs of about $68,000 last year. Now let's look at some news and updates about Bitcoin. So first, with the war between Russia and Ukraine, Bitcoin has jumped back above $40,000 as Russians switched over to crypto from fear of their currency collapsing from the economic sanctions that have been placed on Russia. I think it's definitely a smart move because they could take their Bitcoin and swap it back for a ton of different currencies. Wars in general are inflationary, so it will be interesting to see how this affects the price of all the cryptocurrencies as the year progresses. Then we have the most recent executive order from President Joe Biden, where he plans on learning more about cryptocurrencies like Bitcoin, which has caused the price to actually surge from the good news. With more research and knowledge being passed on to the members of the government, this means that we will be able to better implement a plan on how to use it to our advantage to lower the environmental impacts that the global banking system has. With tons of experts being bullish on Bitcoin's future price, there is a lot of profit potential for those that invest if the predictions of experts like Cathie Wood come true. For example, if you invested $100, it would turn into over $1,000 if Bitcoin was to meet the price prediction of $500,000 per Bitcoin made by ARK funds. So in order to buy Bitcoin, you're going to need a wallet, just like a wallet that you would hold your cash in, except that this wallet is located online. So of course, there are tons of trading platforms that allow you to buy Bitcoin. So, you have Earnity, you have Coinbase, Voyager, Gemini, BlockFi, Robinhood, WeBull. A lot of these platforms all allow you to actually hold Bitcoin and other cryptocurrencies. Now, I will say that the absolute most safe way to hold crypto is to actually get a cold wallet. A cold wallet is basically a physical device that can plug into your computer and keep your currency safe from the internet. If you were to keep it on a platform, you would be holding the currencies in a hot wallet, and that does run the risk of the platform being hacked, and then you would potentially lose your money. So yeah, one particular cold wallet that's very popular is the Ledger Nano, and that's one that I actually have, but I think this only makes sense if you have a significant amount of crypto holdings. If you don't, then holding it on a trading platform like Earnity or Coinbase or whatever is pretty much what everyone does, and it is very safe. I want to end this off with a quote from Warren Buffett that I really like, and that is, "Be fearful when others are greedy and be greedy when others are fearful." I think this is really good investing advice coming from a billionaire that has been in the investing game for decades. So if you get any value from this video, let it be this quote. If you guys want some free stocks or free crypto, make sure to check out the links below. And with all investing, especially crypto, do your own due diligence. If you believe in Bitcoin, make sure to do more research. Let this video be a great starting place. But yeah, you will want to do your own due diligence before investing in any crypto project. While I do think that the crypto market should go up in the long term, short term, we really have no idea. It could dip, it could go up. It's really, really hard to tell. So with that being said, hope you guys found this video helpful. Hope this was a great overview of Bitcoin for you guys. And yeah, if you liked the video, make sure to hit that like button and also subscribe for more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.